7 billion XRP vanished from exchanges. Not lost, not hacked, not dumped, vanished. And the people moving it aren't retail traders. They aren't panic sellers. They're the same institutions that laughed at XRP 2 years ago. So before you assume this is just another supply crunch headline, stop. Because what's actually happening underneath that number is something the market hasn't fully priced in yet. Here's what makes this moment different from every other quiet period XRP has been through. This isn't sideways price action with nothing behind it. This is sideways price action while Wall Street quietly rearranges the pipes that the entire financial system runs on. And XRP is sitting at the center of that plumbing. The question isn't whether something is coming. The question is whether you understand what is coming before the price reflects it. So here's what I want you to sit with for the next 10 minutes. If the smart money is pulling XRP off exchanges at record speed, and retail is sitting on the sidelines, waiting for confirmation, who actually captures the move when it happens? We'll get to that. But first, you need to understand what's being built right now, because most coverage is giving you the headline and skipping the architecture. This is XRP News Flow Signals. We don't do price targets pulled from thin air. We don't do hype cycles dressed up as analysis. What we do, we follow the data, the institutional filings, the on-chain flows, and the regulatory framework, and we tell you what it actually means. Let's get into it. Timestamp, about 1 o'clock to 2:15. XRP is currently trading around the $1.42 mark. 1 week chart, compressed, almost flat. Fear and greed index sitting at 44, back to neutral territory. Now, a lot of people look at that and feel boredom. We look at that and see pressure building. Here's why that matters technically. XRP is trading above both the 50-day and 200-day EMAs. The RSI is hovering around 57, not overbought, not exhausted. The MACD has flipped slightly positive after a prolonged bearish phase, and the Bollinger Bands are tightening around the $1.40 level. For those who don't track technicals daily, tight Bollinger Bands historically precede explosive moves. The market is coiling. The $1.38 level is the line in the sand. That's where the 50-day EMA sits. That's where buyers have stepped in on every dip this week. Hold that, and the next logical target is $1.60 to $1.66. Break it, and we revisit $1.30 to $1.27. Bitcoin is trading back above $77,000. The correlation between BTC and XRP remains present, but something shifted in the past 2 weeks. For the first time in 2026, XRP outperformed Bitcoin on a weekly close. That doesn't happen by accident. But the chart is only half the picture. What's happening off-chain right now, in institutional boardrooms, in regulatory hearings, in post-trade infrastructure? That's the part most coverage isn't connecting to the price. And that's exactly where we're going next. The broader market is being held in place by geopolitical noise. US-Iran negotiations remain volatile. The Strait of Hormuz situation has already moved oil markets sharply in both directions within single trading sessions. When oil spikes, risk assets pull back, crypto included. But here's the nuance that gets lost in the noise. XRP's reaction to the Strait of Hormuz closure was measurably different from previous geopolitical shocks. The April 17th rally to $1.51, the highest print since mid-March, held more of its gains through a bad news weekend than any previous XRP rally in 2026. Every prior rally in 2026 collapsed back to the $1.28 to $1.30 range within 48 hours of hitting its peak. This one didn't. XRP is still trading above $1.40 more than 60 hours after that high. What was different? The underlying catalysts weren't macro. They were specific to XRP's ecosystem. The Rakuten wallet integration hitting 44 million users in Japan. The Ripple Kyobo Life partnership in South Korea. Wrapped XRP going live on Solana's DeFi ecosystem. Those aren't headline pumps. Those are structural demand drivers. Now, before you read that as a straight bullish signal, there's a catch. And if you don't know about it, it could cost you. We'll cover it after the next section. Timestamp, 3:30 to 5 p.m. Let's talk about the number that should be getting more attention than it is. 7 billion. 7 billion XRP has left exchanges since February 2026. On-chain data shows wallets holding between 1,000 and 100,000 XRP have reached an all-time high. That's not whale redistribution. That's coordinated, layered accumulation across multiple holder tiers. Coinbase specifically has slashed its XRP reserves by 200 million units since the start of 2026. Now, on-chain trackers have also flagged large XRP transfers from Ripple-controlled addresses into Coinbase-linked wallets. And that has reignited a legitimate debate. Is this routine treasury management by Ripple? Or is it a setup for additional supply entering the market? That's the catch I mentioned. We don't know with certainty. And any channel that tells you they know exactly what Ripple's treasury moves mean is giving you conviction they haven't earned. What we can say is this. When exchange supply compresses at scale, the price impact of each new buy order increases. That's simple supply-demand mechanics. 7 billion XRP leaving exchanges, regardless of the exact source, reduces the readily available sell-side liquidity. If demand picks up while supply stays off exchanges, the price response can be nonlinear, fast, disproportionate, the kind of move that looks impossible in hindsight and obvious in retrospect. We're also seeing XRP tokenized real-world assets hit an all-time high of $3.5 billion, with over $900 million added within a single 24-hour window. That is not a rounding error. That's a market signal. And that brings us to the part most coverage won't connect, because it doesn't fit the standard narrative. The institutional infrastructure being built around XRP right now isn't future-looking. It's already operational. That's next. Timestamp, /5 minutes to 6:45. On March 2nd, 2026, something happened that deserves far more attention than it received. Ripple Prime, which is the rebranded Hidden Road, the prime brokerage Ripple acquired for $1.25 billion, joined the DTCC's National Securities Clearing Corporation participant directory, not as a vendor, not as a technology partner, as a participant, with full clearing and executing broker credentials. The DTCC processes approximately $2.5 quadrillion in securities transactions annually, and Ripple Prime is now inside that infrastructure, routing institutional post-trade volumes directly onto the XRP Ledger. DTCC's own 2025 patent filings explicitly named Ripple and XRPL as part of its tokenized finance framework. The patents described cross-ledger liquidity tokens and bridge architectures, with DTCC positioned as middleware. Ripple Prime is the first live instantiation of that framework. And the DTCC isn't stopping there. Their April 2026 disclosure confirms they are targeting the tokenization of Russell 1000 stocks, major ETFs, and U.S. Treasuries, with a deployment schedule within approximately 50 weeks from late March 2026. Ripple Prime is already embedded in NSCC to handle those tokenized post-trade flows on XRPL. BlackRock's CEO Larry Fink has been publicly vocal about blockchain-based ETFs and tokenized assets. Nasdaq has signaled its own tokenization roadmap for later in 2026. These aren't announcements. These are live integrations. If you're watching this and you've never seen this channel before, this is exactly the kind of signal-to-noise filtering we do every single week. If that's useful to you, the subscribe button is right there. No pressure. But if you leave and this channel keeps building what it's building, that's on you. Timestamp, 6:45 to 8 o'clock. Let's talk about XRP ETFs, and let's be honest about both sides. 7-spot XRP ETFs have now launched since November 2025. Net inflows crossed $1.24 billion at peak. But here's the honest read. March 2026 saw approximately 31 million leave those ETFs. AUM dropped from a peak of 1.24 billion to roughly 947 million during the downturn. That's not catastrophic, but it's also not what the bulls projected. Now, however, something new entered the picture. GraniteShares launched 3x long and 3x short XRP daily ETFs on Nasdaq on April 23, 2026. That is a significant institutional signal. Leveraged ETF products don't get listed on Nasdaq for assets that institutions have written off. These tools exist for traders who want amplified directional exposure, and their existence suggests institutional market makers expect volatility and volume to return. Swiss institutions poured $120 million into XRP exchange-traded products. That's not retail money chasing a pump. That's structured, regulated capital taking a position. The FOMC meeting on April 28th and 29th will be a critical near-term catalyst. If rates hold and macro conditions stabilize, the risk-on appetite that drove XRP to $3.65 late last year could return. And this time, it would have a fundamentally different infrastructure underneath it. Timestamp: 8 a.m. to 9 a.m. One more development worth covering because it signals where Ripple's development team is actually focused. On April 22, 2026, Ripple published a 4-phase roadmap to make the XRP Ledger quantum resistant by 2028. Phase 3 of quantum resistance testing has already begun on DevNet, evaluating post-quantum cryptography algorithms for future XRPL security. David Schwartz, Ripple's chief technology officer, was quoted, "Quantum resistance isn't optional. It's essential for long-term institutional trust in any settlement network. Why does this matter for price? Because the institutions that manage multi-trillion-dollar portfolios don't commit to infrastructure that doesn't have a credible 10-year security roadmap. Quantum-resistant ledger architecture is a prerequisite for the DTCC, for sovereign wealth funds, for central bank digital currency integration. Ripple isn't building for the next bull cycle. They're building for the next decade of global finance. Here's where we land on all of this. XRP at $1.42 is not an exciting number. The one-week chart is flat. The Fear and Greed Index is neutral. 6 consecutive monthly red candles closed before this month's recovery. But underneath that flat price, Ripple Prime is operational inside DTCC's clearing infrastructure. 7 billion XRP has left exchanges. 343,000 new wallets have been created in 2026 alone. During a period most people would describe as a bear market, GraniteShares just listed leveraged XRP ETFs on Nasdaq. And the XRPL is being quantum-proofed for institutional-grade longevity by 2028. The compression you're seeing on the chart is not absence of activity. It is the surface tension before the breakout. Analyst Ali Martinez has identified a symmetrical triangle on the 12-hour chart, projecting a 35% move to $1.90. If XRP sustains a close above $1.55 resistance, the $1.28 level remains the floor that must hold. The $1.55 level is the ceiling that, when broken, changes the structure of this trade entirely. Watch the FOMC outcome on April 28th and 29th. Watch the Clarity Act markup progress. Watch the Strait of Hormuz for macro risk. Those 3 variables will tell you more about XRP's next move than any price prediction model. This is XRP News Flow Signals. Data, not hype. Analysis, not wishes. If this kind of breakdown is what you're looking for, we'll be here with the next signal when it matters.